In this video, I'll answer the question, is Netflix a buy, hold, or sell? If you don't know me, my name is Tepper and I'm the founder and CEO of Tykr. If you're new to investing or want to get better at investing, rest assured you're in the right place. Here at Tykr, we help people buy and sell stocks with confidence. In this video, I'll touch on three things. Number one, I'll summarize the latest earnings report. Number two, we'll take a look at the ratings in Tykr. And number three, I'll let you know what I plan on doing with this stock. And just so you know, if you want to see the rating on Netflix as well as other stocks, you can join Tykr for free. All right, let's get started. So first off, Netflix had an earnings miss, which caused the share price to drop about 6 to 8% within about a day. We'll take a look at the ratings in Tykr here in a minute to see what the expected earnings report and what the reported was. Next up, leadership is blaming a little bit of the lack of profits or the declining profits on the Brazilian tax dispute. So what it looks like is primarily an expected $619 million tax expense related to Brazil. I had to do a little homework on this. What the heck is going on with this tax dispute? Well, they're calling it a tax madhouse in Brazil. And I'm going to kind of paraphrase here, but Brazil's tax code is notoriously convoluted, it sounds like, with thousands of rules at federal, state, and municipal levels. So based on those complexities, that look like it did impact Netflix. Interesting thing to place blame on. All right, let's keep going. This was great. They had strong revenue growth despite the profit miss. Revenue climbed by 17% year over year, which is fantastic. And this is great. They're placing a high focus on the ad-supported tier. I know a lot of people out there, they don't love ads, especially when you're watching Netflix or Prime or Hulu, or you name your streaming platform. But from an investment standpoint, it's a lot more reliable to charge businesses than it is consumers. You can lock in longer contracts and create that reoccurring revenue. So although we don't love ads, they are good for businesses like Netflix. And then the last comment here is, despite the decline with the share price, analysts on Wall Street are saying that this may still be a buying opportunity. So with that in mind, let's transition to Tykr and have a closer look. All right, we're going to walk through the 7 to determine if this is a strong stock or a weak stock. And we're going to take this a little more manual. Of course, you can save a lot of time. You can simply, looking at my screen here, you can log into Tykr, go to any stock, and then click on the 7. We're not going to do that yet. We're going to go through this again manually, and then we'll take a look and see what we get. You can also filter on the 7 on our screening page, that stocks page. We have like 60,000 stocks as of today, and you can kind of narrow down the best of the best. All right, the first thing on the list would be the summary. Stocks in Tykr are either on sale, watch, or overpriced. That's green, gray, or red. And only about 15% of stocks make it to on sale. You can see in this case that Netflix is a watch. So we're not going to get a point there on the 7, but watch doesn't mean that this is a terrible stock. We'll keep going. Next up, we have the summary in the hexagon here. This is overall financial strength of a stock. Getting above 50 is pretty good. This is at 87. That's quite impressive. However, the margin of safety is at 37%. We want to see both the score and the margin of safety at 50 or higher. That equates to on sale. If it's only one above 50, then it's watch. And of course, if both are below 50, then it's overpriced. So we can see here 37% is still pretty good. There's an upside potential. Look at this share price at 1,200, upside potential at close to 2,000. There are a lot of other stocks out there that have a higher fair value, but this is a good sign. Even though it's a higher share price, that fair value is what you should be paying attention to most. A lot of people get stuck on the share price. Again, focus on fair value. That's what's most important there. All right, so we're going to get a point here in the score, but not a point in the margin of safety. We'll keep going. In the middle, we have the 4M confidence booster. If you can get to 80 out of 100, that is really hard to do. We're sitting at 77. So this tells us, even though the financials aren't great with Netflix, the other 3 M's are looking good. And on that note, let's take a closer look at the M. So if you click on boost confidence, you'll see the breakdown here. So there's the math, there's the meaning, that's how the business makes money. and how scalable the revenue streams are. We like businesses that have a lot of streams of revenue, especially highly scalable streams. What that means is you can increase your revenues a lot faster than your liabilities. The biggest liability would be payroll. All right, then you have the moat. That's how a business compares to other companies in the same sector and industry. And then you have the management, which is the track record of the CEO. Let's go to the next page. We're not going to go through this in its entirety. It takes about a minute or so to go through. This screen here shows you the gamification. What are we going for? So you can see 80 to 100 is high confidence, 60 to 79 is moderate, and anything 59 or lower that's a pretty weak stock. All right, so I'm going to close this. And again, we see the average here from the community because this is actually crowdsourced. In other words, people can go ahead and complete it for him and it's going to average. So 77 is still pretty good, but we're not going to get a point there. Let's keep going. We'll scroll down. This is the 5-year chart. You can see the durations here. I like to set my charts in the settings to 5 years. The reason is, this is a nice round number to remember, which is the S&P 500 typically returns about 80% over 5 years. And we want to pick stocks that are beating the S&P 500 over that duration, not just 1 year, but ideally 5 years. So knowing it's 80% we're looking to beat, we see here, Netflix is at 153, so almost doubling the market. That's what we want to see. That's a really good sign. All right, we're almost done. Let's keep going. We'll go to the financials tab. Revenue, this is picture perfect. This is beautiful. Nice, steady increase. That's what we want to see. It's not that sawtooth up and down I see with some stocks. So nice work, Netflix. But the most important line here is that EPS. We want to see EPS increasing, and look at this. We are seeing that increase, which is looking really, really good. Even though they're complaining about that tax issue, that really relates to the earnings report. But we do see here, it went from $4.37 up to $6.76, and then still an increase, not a huge increase, but still an increase up to $7.35. So we've got 3 consecutive quarters in a row. That's what we're looking for. And we're going to get a point there, which is great. Now we jump to the earnings calendar. This is the miss situation. Looks like the estimate was 696 and they came in at 587. So a miss of about 15%. So no points there. So overall, looking okay on the stock. Let's go ahead, click on the 7. I think we're going to get probably a 4, somewhere around there. Let's find out. Okay, we got a 3 out of 7. Okay, so looking at what we want to do here, we want to see a 5 out of 7 ideally. So this is going to lead up to what am I doing with the stock? Well, because of where this sits 3 out of 7, not 5 out of 7 or higher, I'm going to keep this on my watch list. I've got probably 100 stocks on my watch list. I would say Netflix is probably in the top 20, 25, somewhere in there. I really like the business model. They do have quite a few revenue streams, actually. It's not just a subscription, but they do have licensing. They do have the ads. Again, we don't love ads as consumers, but it's great for a business. And they get a few other revenue streams within. But overall, strong stock. Would I invest in it right now? Probably not. I would probably go look at other stocks. There's a lot of stocks that have like a 5, 6, or 7 out of 7. And a lot of those stocks have actually produced a lot better returns. So yeah, that's what I'm doing. I'm just going to go ahead and throw it on the watch list and take a look at other stocks. Now, if you want to see the ratings on Netflix as well as other stocks, you can join Tykr for free. A few other key details with Tykr is you can know when to buy and sell stocks, you can see my portfolio, and you can connect your broker to Tykr, which automatically updates your portfolio tracker. Of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. Thanks for checking out this video. We'll see you in the next one. Bye for now.